All right, you magnificent market mavericks. Big Money Mike here, coming at you hotter than a freshly inked merger deal. Welcome to the Market Mindset Podcast, where we break down Wall Street chaos into actionable insights for your portfolio. It is April 1st, 2025, and yesterday was wilder than a bull trying to navigate a hedge maze. We have got DuPont reshaping its portfolio, BlackRock laying out a $68 trillion infrastructure vision, and Capital One's merger with Discover gaining traction. So grab your calculators and your coffee. This episode is packed with market-moving intel. Let us start with DuPont, the industrial giant that is making headlines again for its latest moves. Chairman Ed Breen is reportedly shopping around two iconic brands, Kevlar and Nomex. Combined, these assets could fetch around $2 billion in cash. Why does this matter? DuPont recently pivoted from its three-company spin-off strategy to a two-company model. By shedding Kevlar and Nomex, they can focus their resources on growth industries like water solutions and healthcare, areas with strong secular tailwinds. The electronics spin-off remains on track for November 1st. If Breen pulls off these divestitures successfully, DuPont could narrow its valuation gap and fetch a higher multiple in the market. Next up is BlackRock's CEO Larry Fink's jaw-dropping forecast. By 2040, global infrastructure investments will total $68 trillion. That is like building an interstate highway system every 6 weeks for 15 years straight. BlackRock is not just talking the talk, they are walking the walk with two massive acquisitions, Global Infrastructure Partners, GIP, for $12.5 billion and HBS Investment Partners for $12 billion. These deals give BlackRock exposure to everything from energy pipelines to data centers, while bolstering their private credit platform by $148 billion in assets under management. Fink calls infrastructure and private credit the future of diversification, highlighting their potential for uncorrelated alpha generation. Fancy finance speak for making money when stocks are not. Now let us talk about Capital One's all-stock acquisition of Discover Financial Services, a deal that has been making waves on Wall Street. The merger discount between Discover's stock price and the deal terms has narrowed significantly after reports that the Department of Justice may not bring a case against Capital One over its subprime sector. This is huge news because 2 weeks ago analysts were worried that regulatory hurdles might derail the merger entirely. But now, the odds of this deal closing are looking better than ever. If approved by the Federal Reserve and Office of the Comptroller of the Currency, this merger could create a financial powerhouse with significant synergies in consumer lending. Discover rallied yesterday as investors gained confidence in the deal closing, a clear sign that sentiment around this merger is improving. All right, it is time for my hot stock pick of the day, and I am going with Jabil JBL. These manufacturing specialists are trading at a discount that screams opportunity. With a P/E ratio of 15.42 compared to their industry average of 16.51, and a PEG ratio of 1.23, Jabil looks like a value investor's dream come true. Here is why I am bullish. Jabil has exposure to high-growth industries like healthcare technology and renewable energy solutions while maintaining strong operational efficiency across its global supply chain network. For you options junkies out there, I am recommending a Jabil December 2025 $150 call. It is riskier than trying to predict next month's CPI numbers. But if Jabil continues executing on its growth strategy, you could be sitting prettier than Elon Musk at a SpaceX launch party. Looking ahead to Wednesday, April 2nd, I am predicting cautious optimism will return as investors digest updates from DuPont and BlackRock while monitoring Capital One's merger progress. The S&P 500 might edge higher if sentiment around infrastructure spending gains traction, especially given Larry Fink's bullish outlook in his shareholder letter. Meanwhile, the Dow could benefit from strength in industrials like Caterpillar and Boeing as global trade flows stabilize. As for tech-heavy Nasdaq, it might remain under pressure unless we see positive earnings surprises or dovish comments from Fed officials later this week. That is all for today, my beautiful bulls and bears. Remember, in the stock market jungle, only the informed survive. So stay savvy, stay hungry, and may your portfolios always shine brighter than Kevlar under pressure. Big Money Mike signing off. Catch you next time.